and welcome to today's fast-paced video, which is called Where are S&P 500 bears? It's a very valid question, given that they had been able to force only intraday setbacks. So is this picture going to change soon or not? This was the chart that I featured either in yesterday's extensive video or in Saturday's extensive video. And this is the progress that prices have made since the weekly closing price. Consolidation, tiredness, reversal, looming or not? What are the market breadth clues? I had been quite clear to clients on Sunday that this pullback in advanced decline line or volume is not at all terminal. So, have we reached the peak already? Is the counter-trend bounce? Has it run the course? And is it a counter-trend bounce at all? Meaning, have we entered a bear market or not yet? These are all very valid questions given the perspectives. And it's of course said that the wildest rallies happen in bear market contexts, which is of course true. But have a look at those last couple of daily candles. Is this anyhow a wild rally, or are we seeing at most constructive base building with intraday pullbacks and the kind of market breadth moves as seen in these various percentages of stocks trading above various periods of their moving averages? Is this picture, has it changed? What are the interpretations? I have shared these yesterday in detail with clients, and we did not get even an intraday pullback on otherwise bearish setup of news, because it was Lutnick who was closing the array of tariff speakers and no country deal, no framework had been announced, just some kind of positive surprise coming soon, 1 or 2 trade deals, maybe more. Yeah, you get the drift. But the sectoral view had been changing towards the positive side, with discretionaries picking up during the day. So we started with a way more risk of perspective, which had gradually improved, and energy one day outperforming the other way, yesterday being the single one in the red. And tech, troubled tech, we all know what happened with SMCI earnings, where the stock is trading right now, what it means generally for this sector. And yields, why had they declined yesterday? It's more so a matter of jobs significant undershoot, meaning those jobs openings are quite scarce. And today we have GDP data and Chicago PMI with an ADP employment change, which is preview before Friday's headline non-farm payroll data. So we are seeing that reflecting in the bond market, with the short end diving, truly diving, and this is not exactly representative of a strong period of economic growth that ahead, is it? And we had seen a notable and fast Amazon U-turn yesterday when it comes to somewhere, they say not on the homepage, including information about tariff impact on prices. So that had been shut down. US dollar, is this that welcome stabilization that everybody has been waiting for. Certainly those safe haven currencies or euro, this is not the kind of appreciation the King dollar had been showing, and it is still on the lackluster base, so this is the biggest fly in the ointment, and it's kind of mirroring those economic prospects as told by the bond market. You know that I had featured the bond market volatility chart, which is not showing complacency in bonds, but returning demand. And the demand returning to treasuries is on account of economic prospects reassessment. We got as well the UPS data yesterday, and that had not been reflecting kindly. However, Amazon managed to close yesterday in the green. So where are the winners? You see Bitcoin, you see strategy, and this had been my bullish picks. And the reassessment of economic prospects is what had sent down silver and copper today. Look into the economic calendar. There is an interesting piece of data out of Switzerland that is in 3 hours ago. I'm recording this video around 2 hours before the opening bell, and it had been a significant undershoot in the optimistic, or rather say not optimistic, assessment of the investment community as to the prospects ahead. So much for risk-taking as seen in the real assets. Of course, it did not help gold too much either, and only oil slowed down its pace of ascent. So much for the sentiment as being presented by the incoming economic data. My joint page will help you select what's right for you based on what and how you trade. Combine the daily analytics together with intraday updates over the Telegram premium channels.